Hi guys, this is Manni Chopra at the April Titans event with none other than Akhil Mair from Our Mortgage Broker. Welcome, Akhil.
Thank you, Manni.
So, Akhil, what's going on? There's this tariffs, Trump, trade war, global uncertainty. It's manic. It's completely chaotic out there in this Western world. What's going on? And what's more important is what's happening in the UK mortgage market.
Well, there's lots and lots going on. You know, Trump's been in for less than 100 days. He is causing havoc in every single market that you can think of. And I think tariffs are a good thing. I'm honestly of the opinion tariff brings opportunity. You know, tariffs bring opportunity. There's risks, but it's what you do in balancing reward and risk. And when you balance reward and risk, what comes up? Opportunities. And we're in the property business, right? Property is all about risk and reward. And I think, yes, in the short term, there's certainly going to be uncertainty. Stock market's plunging, Bitcoin's plunging, and so on and so on. But on the flip side, mortgage rates are dropping. So that's what everyone's after is
that's all we need to
borrowing.
Know, right?
So listen, you know, this week's been uncertain, but a lot of lenders are dropping rates. And hopefully in May, the US dropped their rates, I think by 0.5%. UK won't follow suit, but I think they'll drop it by 25 basis points, which brings great opportunity for those property investors.
No, I agree. Look, I don't agree with a lot of things, but definitely agree the fact that this whole uncertainty is bringing opportunity for property developers. Cheaper borrowing means it's going to shake up the market a bit. You know, right now what I'm finding is there's a lot of supply out there, a lot of deals, especially in the commercial space where I'm looking at shops and uppers, offices, all of that. So if you can get cheaper borrowing, then I think that would be great. So people have already started, lenders are dropping rates already?
Yeah, lenders are dropping rates, which is one dimension. But you've got to look at the second side of the coin as well. Look at distressed properties. There's a lot of distressed sellers out there that are looking to flog properties. People are looking to immigrate abroad. Look for those opportunities where you can get stuff at 20, 30, 40% below market value. Speak to the receivers, speak to banks that have repossessed properties, and you can get a great deal. So it's all about your network and seeing the opportunity, but more importantly, understanding the end goal. What can you do with a property and how can you add value to it to get a risk and reward?
So in terms of then rates, is it going to be fixed terms that are going to be most affected? So like buy-to-lets and limited company names. And what about, is that the case?
So if you're after fixed money, fixed rate rates, you're always going to pay a premium. So that comes at a cost because you're securing future payments for a period of time. So with high rates, you want to fix your borrowing at shorter periods. So back in the COVID time, between the 2023s, you were fixing for 5 years, if not longer, because rates were at 1 and 2s. But where we are rates at sort of early 4% rates, now is an opportunity to look at opportunities for the shorter period. Look for shorter term funding, because there is an opportunity where rates will come down and then you're able to then flip and then trade those properties on or trade the debt on to another lender.
Right. Okay. And what about development lending? Would that change, you reckon, as well now?
Yep. The landscape is very much similar for whether you're a buy-to-let landlord, you're a developer, even short-term finance for bridging loans. Rates have certainly come down. Lenders look at it from a risk perspective. So cost of borrowing, are you going to a high street lender like Lloyd's for development finance, or are you going to a specialist lender like Shawbrook? So cost of funds is one aspect, your experience, the project itself, the GDV. There's lots and lots of variables out there. But the main thing is lenders are open for business. They've got plenty of liquidity out there. There's huge opportunity to pick up great stock in England. So I still think property is a great space to be in.
I personally agree with you on this side. Definitely, I think, guys, this is an opportunity where I think once in a lifetime, really, if you think about it, because this chaos in the market doesn't happen often. Nope. This global uncertainty has been brought about by the tariffs is not going to happen again, probably in our lifetime. At the sort of scale it is happening right now. So this is causing a lot of fear, I would say, amongst developers and other non-educated property investors, and time to go and definitely shop. So you're open for business. The banks are open for business.
Very important,
What's there not to do, guys? Go get those deals out there, get those bargains, and time we go.
We've got 3 years of opportunity with Trump being in play.
I agree on that bit, but Trump, no. I'll be out there. Thank you, guys.
Leave your comments below.
Cheers.